Hello, ICR Tiger from thetradingtigers.com. Today, 15th of May 2014, we're going to be using the Elliott Wave analysis on the daily charts to look at the gold, SPX 500, US 30, German 30, US 30, US oil, and that's all on the CFDs. Okay, so before we start, once again, as always, please go through the disclaimer, read at your own leisure, and stop and pause, and also do the same for the hypothetical performance. Okay, fine. Let's look at some charts. So, what have we got here? We're on the daily chart, right? We're looking at gold against the US dollar. Okay, so we're currently in a wave 3 of the primary wave. The wave 3 primary wave. It's wave 2 completed on 16th of March 2014. And it came at the high. As you can see, here's the Fibonacci retracements at 78.6. So we went a little bit higher than expected, but as you can see, here's the 100%. If you're wondering what all these lines are, this is one of our kind of tools that we use here at thetradingtigers.com for analysis of Elliott Wave, and we'll be able to go through that with you in our educational program when you enroll. Right now our educational program isn't up, but please do follow us on these videos, and when we have released it, we will be able to update you accordingly. So once again, if you're interested in the educational program, please do send us information about that. Okay, fine. So getting back to where we are, a wave 3 of the primary wave is in process, and its subwaves are the intermediate. The intermediate is green in brackets, and that's currently in a wave 3 process right now. Wave 1, wave 2. Wave 2 is at the high of 14th of April 2014, and its subwaves are the minor waves, which are in pink. And once again, we're in a wave 3. So we're looking at a wave 3 of a wave 3 of a wave 3. And right now, the price is going into some kind of consolidation before it starts to shoot down. We put an entry at 1267.84 to go short, and taking profits along the way. That is right. So our first target would be the 100% level, and then we've got another one at the 161.8, which is off the minor wave, or minor degree, and which is also corresponding to the intermediate wave degree of the 100%. So as you can see, just to recap again, just in case I said that a little bit quick, the targets are at the 161.8 of the minor wave, which is price point 1214.98, which corresponds to the intermediate wave 3 100% at 1216. Same thing. And going up, of course, we've put a little take profit at the 100% level of the minor degree, which is the one in pink. And let me just mark that so you can see a little bit more clearly. It's also a little bit difficult to see. I do appreciate that, traders, but bear with me. There we go, and we'll put a take profit target in there. So two targets, 1252.94, and second target 1214.94. So that's what we're looking for those trades to kick in. Okay, let's move across now to the SPX 500. This is the CFD for the S&P 500, mirror imaging that. We had some trades which we took on May the 12th at the high. Price did go up, and now it's coming down. We can see like a bearish engulfing pattern emerge here, which can be worrying for our trades which probably could stop us out. We could probably take our trades off, bearing in mind how these candles close tonight. So we'll be watching that at very attentive methods. So we'll have to see exactly where it falls, but we don't want to see a bearish engulfing pattern, which is currently emerging right now, or an evening star pattern, or anything like that, which is going to be very bearish kind of reversal candlestick patterns. So that is that. Hopefully the price can actually be pushed up above those particular lines, and we can probably continue with our trade. But that's currently looking at quite a trade which could have closed down, and we're currently sitting at two trades and losing at 220 pips each. Not much of the money's gone, of course, £13 each, but still, pips are pips, and we're only here to gather pips rather than lose pips. Okay, let's move now to USOIL, which is following the WT, American oil, and we've taken a long position. We've taken 3 lots. We took 3 lots 2 days ago. That's on the 12th of May at entry at 101.22 with a stop level at 96.34, and our price point is quite significant in terms of price, not too much, and our stop level is 96.34 and entry 101.22. So currently we put our targets in, and this is the 78.6 level at 105.01, and second target 106.45, and third target 11122, and of course our target ultimately aimed is at that larger wave degree. We've actually taken this trade based on the minute kind of degree, and the minute is the blue in circles. To break down that wave structure, we're currently in a wave 2. This is the wave 2 of the intermediate, being in green in brackets. But if we want to really find out exactly where do we stand overall, we're in a wave 3. As you can see, the wave 2 here. So the wave 3 of the 21st of June 2012, that low is where the wave 2 had ended, and we're confident that our wave count is correct. We'll just double check in terms of ratio analysis, and that passed the 78.6 level, reached close to the 100% level. Of course, it hit one of our very favorite lines, as you can see, and these lines are giving you strong support and resistance where necessary. So wave 3, as I told you, we're currently in that wave 3 of the primary, which is red in circles. Now if we look at the green in bracket, it's also in a wave 3. So we're in a wave 3 of primary, wave 3 of intermediate. We break it down further. The wave 3 of the minor is the green in brackets, and if we break that down further, we can see the blue minute degree is also in a wave 3. So we're in a wave 3 all along, and we can just hope that could be a very strong move up to hit our necessary targets. So I'll be very excited about when this trade comes into fruition. Now let's move to the US 30. That's looking at the it's a CFD, looking at the Dow Jones, and once again with the S&P 500 we can still see this bearish engulfing pattern which has emerged here over today, and is totally engulfed. How many days of full days of trade? Well, of course, one candle has taken out, 2 candles taken 1, 2, 3, 4, and it's a significant move. It can actually stop us out. So once again, we're actually worried about this potential trade looking like it's going to be a losing trade, but I'll be watching this tonight before, as the candles close, to make my decision to come out or not. Main thing is to save the pips and not try to prove ourselves right that we're going to be hit out, knocked out. So let's move to the German 30, which is now also having a bearish kind of sentiment, and we're in a losing trade right now of £2.98 at minus 35 pips, and that is also looking a little bit possible that this trade can actually move up and take us to our profit target. But just explaining where we are on the larger wave degree, we're in a wave 5 of a cycle degree, which is one of the largest. Its sub-waves is a wave 3, and it's a wave 3 of the primary being red in circles, and a wave 3 of the intermediate. So that's how we're looking on terms of that particular area. And as you can see, as our lines are saying, there's beginning to be a bit of a fan kind of approach. We're looking for a more fan kind of area. Okay, fine. So that's the CFDs being looked at today. And I'm ICR Tiger from thetradingtigers.com. Thank you.